good. First of all, a big thank you to Chris and to all the participants who've taken half an hour out of an extremely busy schedule during the week. So thank you for your participation in our webinar around winning with intermediaries and how AI technology like the ones we offer is really powering the next era of mortgage origination. AI, of course, is everywhere. And, there is a growing sense of AI everywhere, but very limited cases which are actually delivering value. And speaking to a lot of lenders and building societies, the focus of AI is rapidly shifting from concept to capability. And the conversation across building societies and lenders is less about whether to adopt AI, and much more about where it's going to add meaningful value, while staying, of course, aligned with the risk appetite, the governance expectation from a regulated industry, and of course, what the members and the intermediaries are saying. Today, what we'd like to do is focus on what I call the voice of the intermediary and really understand how intermediaries are perceiving the benefits that lenders can provide through the use of AI. I am Arindom Basu. I'm the founder and CEO of Digilytics. We focus a lot on delivering AI-enabled solutions to building societies and lenders to improve origination. And with me, I have today Chris Sykes. Chris, welcome once again. Chris, as an introduction, is a specialist mortgage advisor at MSP Financial Solutions with whole of market expertise spanning residential mortgages and more complex borrowing scenarios. He's also a very well-known commentator on the mortgage market with his expert analysis featuring in BBC News, the FT Advisor, The Times, The Telegraph, The Guardian, and a number of other publications. So Chris, let me get this started and probably ask you a very open-ended question around, what do you see are the key challenges from an intermediary standpoint, which you face in effectively and efficiently servicing borrowers, your customers, and in supporting lenders do the same?
Yeah, so I mean, with mortgages, it's obviously a highly regulated industry, and with Consumer Duty coming in a few years ago, the regulations and the guidelines and the compliance requirements from our point of view have only got sort of heavier and heavier over time. So there's always more to do. There's never less to do, and it's how we can use AI and other tools to help us through that journey, and what we can kind of take off our desks and sort of use with clients and as well sort of use to make the journey better for a client throughout the process, whether you can take things off their desk as well with the integrations of AI and models there, and then you can do what an advisor is there to do, really, which is at the end of the day to advise clients on their mortgages and spend a lot of time with clients. Currently, mortgage brokers, that there's so much double entry, even triple entry, where a broker might have their own system or Excel spreadsheet or something. Then they've got a compliance framework that it all has to go into, but isn't user friendly enough to be a full sort of CRM, taking things from stage 1 to stage 6. Then there's a whole lender system that is there as well. So where previously there might have years ago there might have been double entry, now there's even triple entry. And then it's how intermediaries can use tools to aid that journey. And with the industry, it's constantly changing at the moment. There's companies spending millions on creating tech that will solve these issues, but then whether it solves the right issues, whether it does that effectively, whether it's millions are being spent so that they can sell the company in 5 years to somebody and farm some of the data as well. All of those go into our decision making. So it's how intermediaries can use AI in terms of as a tool to help give clients better advice. And with us being in a volatile rate environment recently, in recent weeks, obviously, hopefully as brokers have those tools, they can then very efficiently sort of get those applications into lenders when rates are being pulled at midnight tonight, and you've got to burn the candle at both ends, and those integrations.
Yeah, absolutely. And I think those are very pertinent points because from a lender standpoint, I think every lender is a little bit different in terms of the information that they require from the intermediary, and that ends up being the intermediary having to parcel out sort of different packages of information. Um, in our experience, when we worked with building societies and lenders, the information from the borrower and therefore the broker or the intermediary is really along four dimensions. The first one is ID and V, identity, and the borrower is who the borrower is, and there are slightly different ways, but by and large, consistent industry standards as to how do you accurately identify and confirm the identity of the one or more borrowers on an application. Um, the second one is, of course, credit history and credit worthiness, which is also pretty consistent across the industry, although some lenders tend to have additional sort of credit worthiness checks. The place where we're seeing um, the experience really trip up is around the two next. One is the affordability, and how do you assess affordability? And in our experience, lenders and underwriters are spending a huge amount of time just packaging the affordability information that they require. And intermediaries struggle because every lender is a little bit different. And so the ability to package the case to apply to that lender tends to lead to these double entry and triple entry. And also and you're probably very attuned to this complex scenario, but in buy to let applications, the ability to develop accurate portfolio schedules takes the same amount of resubmissions. We've seen in lenders, affordability information being drip fed or resubmitted maybe between four or five times, especially for specialist lending. And a very similar experience when the property schedule, the list of, you know, uh, encumbered or unencumbered properties, that needs to go into the schedule in the format that the lender requires, is quite complicated and leads to a lot of pain for the intermediary. And uh, we've developed products, one around automated income verification and the other around automated portfolio verification, which is using a lot of AI to ensure that the right kind of documents are coming in. We are being able to pull, the right levels of information from syndicated data sources like Companies House and Land Reg and other, bureau feeds, to be able to simplify the life for the intermediary when they're submitting the application. And equally, that translates into, more efficient underwriting. One building society that we work with and who's been using our product for almost a year now have reported almost a 50% efficiency in underwriting cases and a significant reduction in the amount of back and forth that happens with the intermediary and the lender because of the ability to deploy these tools. Would you agree, or do you have a view as to whether these kind of tools would sort of help the intermediary market at scale?
I think they're absolutely essential, these sorts of tools. And reason being, there's so many lenders out there, and they all do their own thing well. And within those, I mean, you look at building societies and some of the reasons you go to them, like treatment of income, which I think is a little bit further than just sort of affordability analysis. It's really treating that income and understanding that income, and that's where, above what AI can do, AI could potentially put like a risk rating on a case long term after analyzing bank statements and analyzing, right, what's the confidence rating of that valuation and things. AI can do that, but really where building societies add value is the kind of common sense approach, being able to talk to a person rather than talk to a computer, and to allow as many people to be having those conversations as possible, you have to be using all of those other tools. Because if it takes a building society 10 hours per case, then if you can strip off sort of 4, 5, 6 of those hours analyzing bank statements, doing sense checks, evaluations, automating the ID process, even down to requesting digital, I know it's not necessarily AI, but tools at the disposal of a intermediary or building society, and signing of declarations, signing of direct debit mandates. Then even further than that, it goes down to the interactions with the solicitors as well, because that's a clunky process that is that really has been a complaint in the industry for a while now. So this can go as far, or as well, this can go very, very far in terms of what can be done. But also, we're building societies, we're dealing with limited budgets, we're dealing with changes that are happening very, very quickly and frequently. So there, I would say at the moment, there's a bit of a stage of adapting, and a stage of we don't know what to do, because you could spend millions of pounds on this stuff, and then a few months or years later, Claude has sort of done it all, and it's all money wasted. But all of these things, using tools and understanding how much time it's going to save, how much money things are going to save, can then feed into everything else. Because if the process is very, very efficient, then it can reduce the margins that you need to charge. It can let you invest money where money is best needed and further develop the process, even feeding into things like HMRC data to automate sort of income verifications. There are more mainstream lenders doing this now and have been doing this for years, that technology is there that could be utilized. But more than that, it can really be improved with, because at the end of the day, AI today and technology today is the worst it will ever be. Tomorrow it will be better, and the next day it will be better. So it's about using what you can and creating efficiencies.
Absolutely, and that's an excellent point. And just around this affordability point, what we are seeing, seeing the AI capability evolve to, and technology capability has traditionally always been ahead of actual adoption. It takes, 3 to 5 years longer for people to adopt to new technology compared to the technology being launched. And but having said that, where AI solutions are moving to, I'll give you an example of just affordability. So we're working with a lender that's implemented a waterfall of first they will assess based on Cato data, so just current account turnover data. If that fails, or they're not confident with that, then they'll go to HMRC data, and if they're able to see, HMRC information and the right level of detail, they'll go to HMRC data. If that doesn't work, the next step in the waterfall is to look at, detailed documents, things like, bank statements and the detail of that in pay slips or tax documents. And finally, even if that doesn't fail, then some very specialist documents which are specific to the lender. Now, today, Digilytics has the capability of processing this waterfall, but it is the decision as to what step in the waterfall is to be taken is still being done by a human, underwriter. the way the industry is going, and we're again at a very early stages, is trying to build an underwriter's agent who will take over some of these simple decisions as to whether the next step in the waterfall has to be reached or not, as to, is the Cato data adequate? If not, that today is a very manual decision, whereas an AI agent is starting to be able to replicate that in the relatively simple cases. So the direction of travel is that both for the broker and the underwriter, we're starting to see, early simple agents, AI agents evolve that could further enhance the productivity and the efficiency of the broker and the underwriter and allow them to do more of the interaction, more of the human interactions. One of the big things that we've learned is, you know, if the broker doesn't have the human interaction, they very quickly lose the ability to understand how to package and decide a case. And the same thing happens to the underwriter. So we are finding that the human interaction and the one-on-one interaction almost becomes more important. The human intelligence becomes more important when you start using AI tools. And the industry is starting to think about it in those terms. Obviously, it is early days, but there is a definite direction of travel that in the affordability world, AI will be able to help both the intermediary and the lender. And just moving on to another sort of interesting area, and an area that we're spending a lot of time, is what I call the shift in the buy-to-let market from the accidental landlord to the professional landlord. And if you see some of the latest statistics, the UK Finance has reported that there's been almost a 300% increase in limited company SPVs in Feb 2025 compared to 2016. And almost 80% of new buy-to-let purchases are being done through a limited company. Now, in your experience, how is that affecting the market, and what kind of challenges is this posing for intermediaries such as you yourself?
Yeah, the specialist buy-to-let market is incredibly complicated these days. It used to be one of the easiest things to do because you just sort of, right, does the rental cover sufficiently? Yeah, tick, tick, tick. Whereas when all the requirements came in to stress test background portfolios and really understand structures and potentially underwrite all companies a client has that might have property assets, it got incredibly complex, and then it's even become more complex because sort of before rates increased 4 years ago now or so, again it got to an easier stage of being able to sort of assume that you'd be able to get the borrowing and things, whereas with frequent rate changes, every rate change changes the stress test that would be applied to a loan. So it's incredibly complex, and there's things like the background stressing of the portfolios. It started and was really tough for intermediaries in terms of needing to fill out like one spreadsheet for this lender for this deal, another one for that deal, and those have been improving, but I'd say there's still improvements that can be made there. Also, the lenders' understanding and treatment of the types of properties in a portfolio is incredibly important, because you look back and then as soon as there was like a holiday let in a portfolio, that could skew the entire graph, because a lender might go, oh, we're not taking any income from that.
Mm-hmm.
Some lenders are coming around to that, and now I say, because portfolio landlords are needing to become more professional and act more professionally, they might have a portfolio that integrates commercial property, semi-commercial property, HMOs, holiday lets, and buy-to-lets, and then underwriting all of those can be, or finding a home for those all under one SPV can be very complex. Further to that, complex structures of ownership. Accountants are brilliant at playing the tax system, but they're not very helpful for us brokers and lenders sometimes, because I was using ChatGPT the other day trying to explain a company structure and trying to put it into a bit of a graph, because there are so many layers to the ownership of this company that I end up having to go to a very commercial lender in order to get somebody that would understand the layered structure of things. Whereas really the beneficial ownership was very easy. Once you boiled it down, there were just several layers to it, and lots of lenders wouldn't consider it because of that layering. So it has become a lot more difficult, I would say, in recent years, but there's definitely opportunity for it to become simpler again with the use of tech.
I do apologize, Chris. I think Teams was acting up, but I caught most of that. I think this is yet another area where we're seeing AI technology like ours really benefit both the intermediary and the lender. So just to give you an example, we are now able to take a company's house number and then work out from data feeds from company's house and land registry and some of the other data sources like EPC rating register, etc. What is the recorded portfolio schedule for all of the SPVs linked to a company? So linked to that company, by looking at, officer commonality or shareholder commonality in any level, any number of layers which you need to do, you're able to determine using our AI tech as to what that corporate structure of that company is. And then what are all of the properties linked, how many of them are encumbered, how many of them are non-encumbered. And then as we're adding the data sources to it, we're able to see, what is the end use, what is the likely, rental income, what is the EPC rating, and the ability to be able to auto-generate this. Now, there is still cases where a certificate of incorporation has not yet been recorded in company's house, and that information needs to be, still provided by the borrower or the intermediary. For the vast majority of cases, we're able to automate the verification of the portfolio schedule and then use that to triangulate rental income. So along with looking at bank statement information and the information from portfolio schedules and the information from bureau feeds, we're able to triangulate what is rental income without, underwriters having to pour through, hundreds of pages to establish this. And that is leading to a huge amount of benefit, not just for the intermediary, but also for the underwriter. And we believe, just like the affordability agent that I was talking about, we will get to a stage where a portfolio verification agent is going to be able to further increase the levels of automation to be able to assist both the intermediary and the underwriter in originating the cases. Unfortunately, we are almost at the top of the hour, and this has been really, really exciting. I do believe there are a number of questions, but before I hand this over to the attendees listening in, one final question, and this is probably a difficult one, but there is a growing perception among the intermediary world that AI is going to take away their jobs. Do you have a view on that?
Yeah, I think AI is going to change all of our jobs if used effectively. It might take some jobs from people that aren't willing to adapt, but that's what we need to do. Everyone needs to adapt and change to the changing industry, else you'll be sort of digitally out. So yeah, brokers, well, intermediaries in general need to utilize this tech, but more than that, lenders need to utilize this tech as well, because if it's costing one lender 10 human hours and costing another lender 1 human hour per case, well, you're paying for those hours, so your margins aren't going to be as effective as the other lender. So you need to use the tools at your discretion as best you can now. And this also, it doesn't just span across intermediaries and lenders, it's also networks that brokers might fall under, it's compliance teams that directly authorize brokerages might work with, and it's the FCA as well, in terms of we're a slow-moving industry because of the regulatory environment, very rightly so, but the FCA needs to adapt to the changing times as well, and what is allowed and where can data be stored on these systems, and all of those things are very important and need to be adapted to. So I don't think it's taking jobs, but I think it is changing them.
That's excellent to hear. And I think the lenders have a huge amount of role to play in sort of enabling these tools. Obviously, lenders are able to invest more in these tools, but the more our view is that the more they are able to deploy these tools to enable intermediaries to be more effective, the faster the intermediary will change to be more efficient and service them better.
Yeah, agreed.
Unfortunately, I don't think we're going to have time for any audience questions because we're almost at the top of the hour. I did want to give you a huge thanks, Chris. This has been very, very exciting, very insightful. A big thanks to all of the attendees who've joined. A quick plug, we will be conducting a session at the BSA on the 29th of April with um, 3 lenders, Nationwide, Progressive Building Society, and Loughborough, to talk a little bit more about how AI can be leveraged better by lenders to make intermediaries more effective. If you are attending the BSA, please look us up. Please look us up on the website, either ours or on the BSA website. It'll be wonderful to have you participate in that session and ask your questions. Thanks a lot, everybody. Thanks for your time this afternoon. Have a great rest of the week. And one final thanks from me, Chris.
Yeah, thank you very much.
All right. Thank you, everybody.